It's Jay Maja here with the Forex trading outlook for the week ahead, November 10, 2014. This is going to be a week unlike this past week, which was chock full of key events. This is an uneventful week, not much in the way of a risk unless we have some sort of a surprise. The holidays in the U.S. and Canada on Tuesday are likely to make a cautious start to start the week. And once again, how the dollar ends the week is more important than how it begins. Why early thought is because of lack of key events and the pace of the move this past week, and in dollar yen, which actually rose at about 6% following the surprise Bank of Japan QE a week ago on Friday, and the euro dollar, which plunged to a new low after the ECB meeting on Thursday. The market may need a breather. If so, then we're going to consolidate, and you can pick your consolidation range, but initially it's in euro, it's 123.50 to 124.50, and in dollar yen's case, maybe 114.50 to 115.50. That's the initial thing, but the risk is on the dollar upside and is likely to stay that way. And if we can confirm that with charts, and then we'll go into something a little bit more deep after that. If you look at the chart here, this is the weekly chart. I always look for game changer levels to start. It's 131.10 and it's the trend line. 128.85 on top here. Neither at risk. 124. 120.40 is still a target now that we broke 126.62 and this 127.45 area. So as long as we stay below here, the risk is here, but it's the pace and timing which is more important for us traders. So if we look at the daily chart, similarly, got a downtrend here. The key level is at 125.77, which is last week's high. I believe that was the high. Not much on the downside, so the most recent low is important, but I'm using 123.50 as a key level. And the reason I'm using 123.50 as a key level, it splits 122 and 125, and with no obvious key support in the area. 123.50 would have to be broken on the downside firmly to set the market going for 122. It stays above 123.50, then the range is to 125. Now, one pattern I've noticed in this move, we've been consolidating against around big figures. We did it at 126. We did it at 125 5 days in a row until we broke this pattern on Friday. It traded to this level. Maybe now we'll do it at 124. So you got to watch the 124 level. If we stay between 123.50 and 124.50, see if 124 prints. If it does, then it really signals some consolidation. That is a possibility with no key event risk coming up. So that's my view for the week. To start up with some consolidation. We've seen it before, but only above 125 would cause this market to really pause. If you look now at the 1 hour chart, and the 1 hour chart's interesting. I drew these levels on the breakdown yesterday. It comes into around 120, 440.60. That's your resistance level. If you get back above here, then we go into 125. Key level here is 125, around 35 or so. But 125 is clearly an obstacle on the upside, and this is your initial resistance band. If we stay below this resistance band, then the range is initially to 123.50-60, let's say. The range on Friday was 123.57 to 124.42, so it was within that 123.50 to 124.50 level. Now I want to discuss one more thing, and it involves why the euro is going to stay weak, and to put it bluntly, and it seems that what the Draghi on Thursday did not say anything new, but the market jumped on is the fact they're looking through the forest, through the trees, I guess, and they see that if the ECB is intent on expanding its balance sheet by €1 trillion, it doesn't have the assets to buy. The only assets that it could buy would be sovereign bonds to achieve that goal. So they see QE as inevitable, and they're starting to price that in, especially with the U.S. diverging by eliminating its tapering and looking to raise rates, while the ECB may be forced to expand its balance sheet. Why dollar yen surged 6% following the surprise and shocking, some say, Bank of Japan decision to expand its quantitative easing by more bonds. It is because it was not factored in the market. The market assumed the Bank of Japan wasn't going to do it right away, and that shocked the market. In the ECB case, they're factoring it into the market, and that's likely to keep the euro under pressure. One more thing here, if you look at this link, it's embedded in the video. I suggest you click on it. It's a link to the Global View Forex forum. We've been around for 18 years. It's the best forum on the web. It's more like a global trading room, and it speaks for itself. So I strongly suggest, if you're not a member and you want to get access to breaking and actionable trading ideas, just click on this link. Otherwise, good luck and good trading.